This audiobook is written and produced by WealthBooks. Break free from the chains of traditional banking and reclaim your financial destiny. In this transformative book, you will uncover the secrets of self-banking and ignite your inner power to control every dollar you earn. Explore bold strategies, modern tools, and timeless principles designed to liberate you from outdated financial systems. Embrace the freedom to be your own bank and write your own story of wealth and independence today. Chapter 1. The Awakening. Recognizing Financial Independence. In the early hours of a Tuesday morning, John found himself poring over his bank statements with a mix of disbelief and determination. The numbers on the screen revealed a truth he had long ignored. His hard-earned money was slipping away through small, unnoticed expenses and recurring fees that collectively drained his financial stability. John wasn't a financial expert by any means, but that morning marked a turning point, a moment of awakening to the fact that he needed to take control. His journey began not with grandiose schemes or complicated theories, but with a simple realization. If he could manage his day-to-day spending, he could be his own bank. John started by listing out every single expense from the past month, a task he approached with a no-nonsense attitude. He recorded each transaction, from the regular coffee shop visits to those unplanned dining-out splurges. What emerged was a clear picture. A total monthly drain of nearly $450 on non-essential purchases. With this eye-opening data, he decided on a concrete action. Eliminate or reduce those unnecessary expenses by at least 30%. Within 2 months, John had redirected approximately $135 a month into a dedicated savings account, a decision that gradually built his financial buffer. His approach was simple and actionable: tracking, trimming, and then saving the freed-up cash. Equally transformative was John's encounter with budgeting. Instead of relying solely on vague financial plans or the ever-elusive saving mentality, he adopted a system akin to those recommended in trusted resources like the index card. Every dollar was given a name and a job. He allocated set amounts for essentials like rent, groceries, and utilities, while assigning a fixed sum for leisure that was strictly monitored. John's monthly budget became his roadmap. His savings grew steadily as he saw firsthand that strict, deliberate planning could replace the uncertainty of waiting for a surprise windfall. This hands-on, disciplined method not only put his finances in order, but also instilled in him a sense of pride and self-reliance. Alongside these steps, John also embraced the practice of self-education. He spent evenings reading books and listening to podcasts that broke down complex financial ideas into straightforward steps. Rather than getting lost in technical jargon, he focused on practical lessons, understanding compound interest, grasping the basics of investment vehicles, and learning to distinguish between debt that builds wealth and debt that undermines it. One evening, after absorbing a particular insight into the importance of an emergency fund, John set a clear milestone: to save at least 3 months' worth of living expenses. This goal, though challenging, was made tangible by breaking it into weekly savings targets. It was an approach that resonated deeply with him, a blend of determination and practical mathematics. Stories of others who had faced similar challenges further fueled John's resolve. He recalled meeting a colleague, Maria, who had been burdened with $15,000 of credit card debt until she realized that her spending habits were the primary culprit. Maria had meticulously audited her monthly expenses, discovered recurring fees she never questioned, and negotiated better terms with her service providers. Within a year, she reduced her debt by over 40%. These personal accounts were not just motivational anecdotes. They were hard data proving that real change was possible with deliberate, step-by-step adjustments. John realized that financial independence was not an abstract dream. It was a measurable, attainable reality. To operationalize his newfound mindset, John turned to tools that simplified the process. He started using a basic spreadsheet to log his expenses and income, updating it every day. The act of writing down each transaction became a ritual, a constant reminder that every dollar mattered. His simple, self-managed record-keeping was far more effective than any automated system he had previously trusted without a second thought. For John, this was the essence of being his own bank, the freedom to decide exactly how every cent was used, rather than leaving it up to faceless institutions. In time, John's disciplined actions began to yield significant results. His account balance grew steadily, and he was able to seize opportunities that once seemed out of reach, like taking a well-deserved vacation without resorting to credit, or investing in a small course to further his career. Every milestone, from the first $1,000 saved to reaching the halfway mark of his emergency fund goal, reinforced his belief that personal financial independence was within grasp. His voice, once subdued by uncertainty, now carried the clear message that financial freedom was an achievable goal, rooted in accountability and simplicity. John's awakening was a testament to how everyday decisions could reshape one's destiny. It illustrated that by confronting the small, often overlooked details of personal finance, anyone could transform into the master of their own financial future. Through rigorous tracking, disciplined budgeting, and continuous learning, John had become a living example of financial empowerment, a vivid reminder that the journey to being one's own bank begins with a single, deliberate step. Chapter 2. The Myth of the All-Powerful Bank. Imagine a world where the towering banks that once seemed invincible reveal themselves for what they really are: institutions driven by profits, cloaked in layers of fine print and hidden fees. In this narrative, one sees that the power banks' hold over personal finances is not a matter of fate, but a structure built on exploitable gaps. Mark, a diligent office worker with a modest savings account, felt his faith in these institutions shatter when he received his annual statement. Despite years of faithfully depositing his paycheck, the bank's interest rate, a pitiful 0.1%, barely kept inflation at bay. Mark's story is not unique. It's a wake-up call echoed in the experiences of countless individuals whose money was slowly eroded by fees and low returns. Mark started by meticulously tracking every fee, no matter how small. He set aside an hour every month to review his statement line by line. His investigation uncovered a series of charges that, when added over the year, amounted to nearly $150 in fees, a silent drain on his savings. This process of scrutinizing the fine print became his first lesson: never take the bank's promises at face value. When consumers like Mark take a magnifying glass to their bank documents, they often discover clauses that allow for sudden rate hikes or penalties for services that are, in practice, unavoidable. It's a raw, no-nonsense strategy that requires the same diligence as any other aspect of personal finance. Linda's story reinforces this approach. She had always assumed that her credit card offered her stability until a sudden interest rate increase forced her into a cycle of escalating debt. Faced with bills that soon exceeded her monthly income, Linda realized that her lender's comfort was not built on her well-being, but on a system designed to extract maximum profit at minimal notice. The painful lesson she learned was simple. If the terms of a financial product are not crystal clear, they are likely to hide detrimental surprises. Linda switched to a credit union known for transparent practices and lower fees, a decision that saved her hundreds of dollars annually. Her experience underscores the importance of choosing financial partners who prioritize clarity over complexity. For those feeling trapped by the traditional banking system, there are practical steps one can take immediately. First, dedicate time to learning the exact terms of every account and service used. By reading every clause, especially those related to penalty fees and interest adjustments, individuals can avoid the traps that often go unnoticed. Mark's monthly habit of reviewing his account served as an effective self-audit, revealing recurring maintenance fees that had previously slipped under his radar. The moment he canceled the service tied to that fee and found an alternative account with zero charges, Mark saved nearly $200 in 1 year. This isn't theoretical advice. It's a concrete example of how vigilance translates into financial benefit. Another actionable tip is to diversify where and how one holds money. Instead of relying solely on a single banking institution, pairing a primary account with a secondary account at a low-fee credit union, or even a digital wallet with a decent interest rate, can mitigate risk. In doing so, individuals create a safety net that protects against abrupt policy changes or unexpected fee hikes. Linda, for instance, managed her expenses by splitting her finances between a high-visibility checking account and an emergency savings account at a smaller bank with excellent customer service and fewer hidden charges. This diversification provided her with both liquidity and security, a balance that is often missing when funds are consolidated in one institution. Technology also plays a pivotal role in combating the opacity of traditional banks. There are now numerous apps designed to track spending and alert consumers to unusual charges. By using these tools, individuals transform from passive account holders to active managers of their personal finances. Mark adopted such an app that flagged even minor irregularities, allowing him to intervene quickly if his bank attempted to levy an unforeseen fee. This proactive approach is a modern-day shield, arming individuals with the data and the insights needed to outsmart systems rigged in favor of the institution. The myth of the all-powerful bank, as it turns out, begins to crumble when one replaces blind trust with actionable scrutiny and diversified strategies. The lesson is clear. Banks operate under models where profit, not customer welfare, is the prime objective. Their practices, ranging from the micro-charging of fees to the sudden alterations in interest rates, are designed to benefit the institution first. The power is not inherent, but can be wrested back by anyone willing to scrutinize the details and act decisively. Through Mark's careful review of his statements and Linda's courageous switch to better alternatives, a blueprint emerges for reclaiming control. The blueprint is simple. Read every line of your agreement, monitor your accounts regularly, diversify your financial holdings, and leverage technology to stay ahead of hidden charges. By transforming passive acceptance into proactive management, individuals can reshape their financial destinies and take back the power that has long been misdirected towards the banks. In dispelling the myth of the all-powerful bank, the narrative delivers a clear message. The power to secure one's financial future lies in one's own hands. Through persistent, practical, and precise action, anyone can disrupt the status quo and build a self-reliant financial life that defies the constraints of traditional banking. We hope you're finding this audiobook useful. Please give it a like and consider subscribing to the channel if you haven't already. It really helps. Thanks so much. And now back to the audiobook. Chapter 3. Building Your Financial Fortress. Building your financial fortress begins with a clear-eyed view of where one stands and a solid plan for taking control. In this chapter, the narrator paints a picture of a man named David, a regular guy working a 9-to-5 job who discovered the hard way that relying solely on traditional banks left him exposed to high fees and hidden charges. David began his journey by tracking every single expense on paper, a practice he learned from reading simple, no-nonsense resources like the index card. With nothing more than a notebook and determination, he recorded his income, his small discretionary expenses, and even the seemingly insignificant coffee runs. This simple habit unveiled the reality of his financial habits and formed the cornerstone for his personal financial fortress. David's story underlines a painful truth. Many people never look closely at their money. In his case, he was shocked to see that a $3 latte every morning was quietly siphoning off more than $1,000 a year that could be redirected into something more meaningful. After spending just 1 month writing down his daily expenditures, he realized that by cutting back on unnecessary spending and dining out only a few times a month, he could free up a significant amount of cash to create a buffer for emergencies. His first actionable step was to establish what experts would call an emergency fund. Setting a modest goal, he dedicated $200 a month towards this fund until he had accumulated at least $2,400, a sum that could cover unexpected car repairs or a minor medical crisis. With his new fund beginning to accumulate, David moved on to the next phase, diversifying his approach to saving and investing. Following the straightforward wisdom of Mr. Money Mustache, he understood that simply stashing cash in a savings account was not enough. He researched low-cost index funds and began contributing a small percentage of his paycheck, starting with 5% and then gradually increasing it over time. By the time he had saved $5,000, the extra discipline of regular investing had not only boosted his confidence, but also given him a taste of his money's growth potential. His experience demonstrated that even modest investments, when treated as a fundamental element of one's financial plan, could transform a stagnant bank balance into a growing asset. An essential piece of building his fortress was taking control of where his money lived. David recognized that digital tools offered both convenience and security. He set up an online budgeting system that provided a clear snapshot of his expenses, savings, and investments on a weekly basis. This approach was not about obsessing over every penny, but about creating a reliable system that could signal when something was off track. When unexpected events occurred, like the surprise expense of a leaky roof repair, he was ready. Instead of scrambling and borrowing, he turned to a meticulously built digital ledger that had been updated every week, ensuring he always knew the next steps to take. His habit of reviewing his financial status every Sunday evening became a non-negotiable ritual. Building a financial fortress also meant being proactive about reducing unnecessary fees that chipped away at his wealth. David made it a priority to compare the fees associated with various financial institutions. He discovered that some credit unions offered much lower fees than big commercial banks, and he wasn't afraid to switch services to keep more of his hard-earned money. This decision to actively manage his financial relationships proved immensely rewarding. On one occasion, he saved nearly $200 a year simply by transferring his checking account to a more consumer-friendly institution. Milestones marked his journey, each one not just a target, but a tangible boost to his self-confidence. The moment he saved his first $1,000 was celebrated not with a costly splurge, but by treating himself to an evening of reflection and planning. That celebration wasn't about excess. It was a quiet acknowledgement of a new, more secure future. Over time, David's fortress grew stronger, built on the foundations of disciplined saving, informed spending, and a willingness to take small but deliberate risks through carefully chosen investments. Ultimately, the narrative of building a personal financial fortress emphasizes that every small step counts. The approach is simple but direct. Track every expense, build an emergency fund, invest consistently, and always be on the lookout for ways to minimize avoidable fees. This method isn't reserved for financial experts. It's accessible to anyone who is willing to take command of their personal economy. David's experience reminds the public that transforming one's financial life isn't about drastic measures or instant wealth. It's about adopting steady habits and making informed decisions that, over time, create a secure and independent financial future. Chapter 4. Tools of Self-Banking. Leveraging Modern Financial Technologies. In a world where traditional banks often seem more like obstacles than allies, the emergence of modern financial technologies offers a practical escape route, a toolkit that empowers anyone to become their own bank. Picture this. A self-taught entrepreneur named Alex, tired of unpredictable fees and bureaucratic delays, dives into the realm of digital wallets and cryptocurrencies. Alex's journey began with a simple step: opening a digital wallet with a reputable provider. Within hours, Alex had a secure repository for personal funds, free from the clutches of high bank fees. This action not only saved money, but instilled confidence in managing finances independently. Alex learned that the first move was to secure access. The digital wallet wasn't merely an app, it was a digital safe. By focusing on security basics, such as using strong, unique passwords, two-factor authentication, and regularly updating recovery phrases, Alex mitigated the risk of unauthorized access. It was a wake-up call for many. Protecting one's financial future begins with safeguarding entry points. Realize that if a stranger can access your funds, the entire concept of modern finance crumbles. This isn't a distant possibility. It's a pain point many face when their identities are compromised. Alex's approach was methodical, turning the labyrinth of digital security into a series of small, manageable tasks that anyone could emulate. Next came the leap into the exciting yet intimidating world of cryptocurrencies. Alex started small by buying a modest amount of Bitcoin, a fraction that would later prove to be a prudent investment. The goal wasn't to gamble, but to learn how decentralized currencies operate outside the constraints of traditional banking. The tangible benefit? Transactions without delay or hidden fees, and the reassurance of blockchain technology, which ensures each transaction's integrity. Alex's modest purchase of Bitcoin, which rose by 15% within a year, wasn't just a profit. It was a tangible milestone that underscored the potential of decentralized finance. The journey didn't stop at acquiring cryptocurrencies. It extended into the realm of decentralized finance, or DeFi, a sector where borrowing, lending, and earning interest take place without banks. Alex discovered that platforms like Aave and Compound allow users to lend out their cryptocurrency holdings, yielding interest rates far superior to those offered by most traditional savings accounts. Imagine turning idle digital assets into active sources of income. Alex's case was straightforward. By lending a portion of the digital wallet balance, an additional 6% return was generated annually, a figure that outshined the paltry yields of conventional banks. This kind of return was not an abstract promise, but a real, measurable benefit, showing that self-banking can yield tangible financial growth. Beyond personal gains, Alex's path illustrates how modern financial tools address everyday pain points, such as delayed transfers, exorbitant fees, and limited banking hours. One palpable example was when a friend of Alex, Jamie, needed to send money overseas quickly and affordably. Traditional banks would have taken days, charging high conversion fees and processing delays. Instead, Jamie used a decentralized platform to execute an international transaction in minutes, while spending only a fraction of what a bank would require. Such stories resonate because they transform abstract benefits into real, immediate improvements in daily life. The transformation through modern financial tools is not merely about saving money. It's about reclaiming control. By leveraging digital wallets, cryptocurrencies, and DeFi platforms, individuals bypass lengthy procedures and frustrating bureaucracy. Alex's advice is simple. Start small, secure your digital presence, learn the basics of decentralized currencies, and test the waters of DeFi with a minimal risk investment. One does not need to be a tech expert. Through step-by-step platforms that guide users through each process, the world of self-banking opens its doors to anyone willing to take charge of their financial destiny. For many who have grown weary of feeling like a cog in the financial machine, these modern tools provide a new lease on economic self-determination. They not only reduce dependence on outdated institutions, but also offer real-world solutions to age-old problems, like excessive fees and delayed processing. Alex's story serves as a testament that by making small, calculated moves, anyone can achieve a sense of liberation in managing their own money. Real numbers and tangible benefits are the pillars of this self-banking revolution, and Alex stands as a reminder that the power to control one's financial future lies in the willingness to embrace new technology and leave behind the traditional confines of the banking system. Embracing these tools today means stepping into a future where financial independence is measured by real results and everyday victories, where every transaction is an assertion of autonomy and every digital safeguard is a barrier against unnecessary risk. This is the blueprint for becoming one's own bank, a journey paved with actionable steps, measurable milestones, and the determination to rewrite one's financial narrative. Chapter 5. Mastering Money Management and Financial Discipline. In a modest suburb where everyday struggles with bills and unexpected expenses were all too common, one individual's journey toward financial discipline began with a simple decision: master every dollar earned. This is a story that unfolds in a straightforward manner, much like the no-nonsense advice seen in Trusted Resources. It follows a person determined to take charge of money management with tried-and-true principles, turning abstract ideas into concrete, actionable steps that anyone can use. At the heart of the journey was the understanding that the first step toward mastering finances is to track every cent that enters and leaves the wallet. For 30 days, a young professional named Alex committed to recording every expense, be it a morning coffee, a lunch out, or even a small impulse purchase. Alex discovered that those seemingly insignificant costs were adding up to over $200 a month. This realization was the catalyst for change. Listeners learned that for every individual, conducting a meticulous 30-day expenditure review offers a clear picture of spending habits, paving the way to budget restructuring and, ultimately, financial empowerment. Following the tracking of expenses came the vital practice of building a workable budget. Alex used a simple, straightforward spreadsheet, eschewing flashy apps in favor of a method that offered absolute control and clarity. By categorizing expenses into essentials, such as rent and utilities, and non-essentials like entertainment, Alex aimed to cut non-critical spending by 25% within the first 3 months. This approach, while rigorous, was rooted in a practical philosophy. Budgeting isn't about deprivation, it's about prioritizing values. The actionable advice for listeners is clear. Allocate income into buckets that ensure essentials are covered, set a modest limit for luxuries, and always remember to reserve a slice for savings. One of the key milestones in this journey was automating savings. Faced with the risk of spending what remains at the end of the month, Alex set up an automatic transfer of 10% of every paycheck into a high-yield savings account. This move created a financial buffer that eventually grew to cover 3 months' worth of living expenses. It's a reminder to all listeners, automating savings isn't a luxury for the well-off. It's a foundational strategy for anyone serious about building financial resilience. The principle is simple: pay yourself first, and let the system work in your favor without daily temptations to overspend. Investing, another pillar of disciplined money management, was introduced once the basics were in control. Alex began with low-cost index funds, investing $100 monthly after establishing a small emergency fund. Over time, as financial habits solidified, the investment contributions increased alongside income growth. The real-life lesson here is that even modest regular contributions can compound impressively, turning what might seem like minor amounts into a substantial nest egg. The advice remains approachable. Start where you are, use low-cost, diversified options, and gradually increase contributions as confidence and income grow. Of course, no journey is without its setbacks. There was a period when unexpected car repairs threatened to derail Alex's progress. Instead of succumbing to panic, Alex revisited the budget, temporarily trimmed discretionary spending, and even temporarily paused new investments. Within 2 months, the repair was fully covered, and the financial plans resumed their steady progress. This incident underscores a critical point. Life is unpredictable. Therefore, part of mastering money management involves planning for uncertainties with a safety net that covers at least 3 to 6 months of expenses, ensuring that one can navigate unexpected challenges without plunging into debt. Discipline also meant reevaluating recurring expenses. Alex scrutinized subscriptions and memberships, canceling 3 that were barely utilized, and negotiating a better rate on a gym membership by committing to an annual plan instead of paying monthly. Real change came from understanding that every subscription fee or small payment was a vote cast for one's financial future. Listeners are encouraged to periodically assess these recurring costs and question whether each service truly adds value to their lives. The accumulated savings from these small decisions can be redirected into higher priority financial goals. In addition to these practical measures, the journey was deeply personal. Alex kept a journal documenting not just the numbers, but the emotional and mental shifts that accompanied each financial decision. The narrative encourages listeners to recognize that mastering money management is as much about cultivating a disciplined mind as it is about controlling cash flow. Every time Alex revisited these journaling pages, it reaffirmed the determination to maintain steady progress, and it served as a reminder of hard-won milestones that once seemed unattainable. This chapter of disciplined money management is not a call to extreme austerity, but rather a blueprint for sustainable growth. By tracking every expense, constructing a focused budget, automating savings, starting modest investments, and continually reassessing subscriptions, anyone can build a secure financial foundation. The story of Alex, with tangible numbers and specific steps, offers a replicable roadmap for those ready to reclaim control over their finances and truly become the masters of their own bank. We hope you're finding this audiobook useful. If so, please give it a like and consider subscribing to the channel. It really helps. Thanks so much. And now back to the audiobook. Chapter 6. Navigating Risks and Building Resilience. In a world full of economic twists and turns, he learned early that the only constant in life is change. Everyday risks, market swings, unexpected bills, even a sudden loss of income, can shake even the steadiest financial plan. For many, the path to becoming their own bank hinges on mastering these risks and building a fortress of resilience. Take, for example, the story of Mark, a dedicated construction worker in his 40s who discovered that his paycheck alone could not guarantee his future. When his company underwent downsizing, Mark's monthly income dropped by nearly 30%. Instead of succumbing to panic, he methodically examined his expenses, cut out non-essentials, and focused on creating an emergency fund that would eventually cover 6 months of living costs. His disciplined approach transformed a potential crisis into a turning point toward financial independence. It begins with understanding that risks are not failures, but opportunities for growth. Being proactive means setting concrete, actionable steps for every possible scenario. One key step Mark embraced was to calculate his bare-bones monthly expenses down to every cent. With a clear number in hand, he committed to saving at least 15% of every paycheck. This wasn't about depriving himself. It was about removing the fear of uncertainty and reclaiming control. In practical terms, this meant automating his savings into a high-interest account and tracking every transaction with simple budgeting tools like spreadsheet trackers or basic money management apps. The idea was not to guess, but to know exactly where every dollar was going and what was needed to cushion him when life threw a curveball. He was not alone in this journey. Consider Emily, a schoolteacher who also encountered the harsh sting of unforeseen expenses when her car needed a major repair unexpectedly. Faced with a repair bill of over $2,000, Emily had a backup fund that not only covered the cost, but allowed her to replace her tires and service her engine without resorting to high-interest credit cards. Her experience drives home a simple yet essential truth. Risks are personal, and resilience is built one smart decision at a time. By setting aside $200 a month, Emily accumulated over $2,400 in just 1 year, a safety net that reminded her every single month that she was in control of her financial destiny. No reserve financial habits are dangerous. When you rely on credit or, worse, impulse spending to cover gaps, you're gambling with your future. A practical tip that many advisors echo is to segment finances into clearly defined buckets. One bucket covers everyday needs such as rent, utilities, and food. Another is dedicated solely to emergencies. A third bucket might serve future investments or even entrepreneurial ventures. By divvying up money this way, a person not only creates a visual picture of their financial health, but also builds layers of defense against unforeseen disruptions. For instance, even if one bucket is temporarily exhausted, others remain intact to prevent a complete collapse. Numbers speak volumes in this narrative. When Sarah, a freelance graphic designer, experienced a drop in client work during a slow season, she was able to manage her bills because she had methodically saved 10% of her income every month, accumulating over $5,000 in her emergency fund within 18 months. This fund gave her the breathing room to re-strategize her business approach without the looming pressure of overdue bills. The lesson is clear. Setting aside as little as 10% consistently can create a robust foundation in times of turmoil. The journey of mastering risks is paved with continuous learning and adjustment. It involves seeking out reliable sources of financial advice and being willing to pivot when circumstances change. Resilience isn't just about the money saved, but the mindset cultivated, acknowledging that unexpected events will occur and preparing for them deliberately. In practice, this means reviewing one's financial plan at least twice a year, recalibrating budgets when incomes increase or decrease, and keeping abreast of market trends that could impact personal investments. It means treating every financial hiccup not as a setback, but as an opportunity to refine one's approach. The overarching message in his story is that risk is not an enemy, but a catalyst for developing strength and self-reliance. By embracing structured saving methods, setting up clear financial buckets, and learning from real-life setbacks, anyone can turn financial unpredictability into a stepping stone for greater independence. He didn't let the fear of market volatility or unexpected emergencies trap him. Instead, he turned them into fuel for a strategic, resilient, self-managed financial future. His story is a compelling reminder that every small, disciplined choice adds up day by day, turning uncertainty into a challenge that is met and conquered. Chapter 7. The Self-Banking Lifestyle: Creating Your Personal Financial Ecosystem. In a world where traditional financial institutions dictate every move, Alex found a way to reclaim control over his money and his future. This chapter unfolds the journey of everyday people who, much like Alex, decided that living paycheck to paycheck was not an option. The self-banking lifestyle is not about making radical shifts overnight. It's about reshaping daily habits into a comprehensive ecosystem where every dollar works with a purpose. Alex's story began when he noticed a troubling pattern. He was always surprised by how little he saved, even though his income was steady. One evening, after meticulously reviewing his bank statements, he realized that sporadic dining out, unplanned shopping sprees, and subscription fees were eating into his finances. It was then that Alex embarked on a mission to revamp his approach to money. He started by setting clear, actionable targets for each expense category. For instance, he allocated a strict monthly budget for groceries, entertainment, and personal development. By carving out these boundaries, Alex began to see immediate improvements. He saved an extra $150 the first month alone. To implement these changes, Alex adopted a no-nonsense habit. Every evening, he recorded his expenses in a simple spreadsheet. The routine quickly became an eye-opener, revealing that small daily expenses, like a $3 morning coffee, when unchecked, could add up to over $90 a month. By making minor adjustments, opting for home-brewed alternatives, or reducing frequency, Alex redirected that money into his personal savings account. His straightforward technique underscored an essential truth. Real wealth is built gradually by reclaiming control over the everyday decisions that silently drain resources. Alex wasn't alone in his pursuit. Consider Maria, a school teacher with a modest income who had for years struggled to see progress in her savings. Like many, Maria had dreams of home ownership and financial independence, yet found herself trapped by recurring bills and miscellaneous expenses. Her breakthrough came when she started using a budgeting envelope system. Every week, Maria divided her cash into envelopes labeled essentials, savings, investments, and fun. Even when using digital tools later on, this tactile method provided a concrete sense of control. Within 6 months, Maria had not only paid off a lingering credit card debt, but had also amassed nearly $3,000 in a dedicated savings fund earmarked for her future down payment. These stories resonate because they highlight practical, actionable steps rather than lofty ideals. The key to a self-banking ecosystem is consistency and the willingness to track every cent. Financial discipline, as shown by Alex and Maria, is less about grand gestures and more about the cumulative effect of small, deliberate choices. For instance, Alex set up automatic transfers that directed 20% of his income into a high-yield savings account immediately upon payday. This move ensured that his savings grew consistently, without the temptation to spend first. Meanwhile, Maria took advantage of free online financial management tools that offered real-time tracking, category breakdowns, and even alerts when spending was nearing her preset limits. In practice, the self-banking lifestyle extends beyond personal budgeting. It involves establishing a mini financial universe that empowers individuals to make choices aligned with long-term goals. For many, this means merging personal finance with lifestyle decisions. Alex began cooking more at home, replacing expensive takeouts, and even discovered the joys of meal prepping. He set a simple goal: invest the money saved from one less restaurant visit each week into an index fund. Over time, these consistent contributions, compounded monthly, not only augmented his savings, but also opened up new investment opportunities, reducing his reliance on external institutions. Maria embraced the idea of micro-investing. Every week, instead of spending money impulsively, she allocated a small sum, sometimes as little as $5, into diversified portfolios through automated apps. This was not a get-rich-quick scheme. It was a steady, disciplined approach that turned her daily habits into milestones of financial progress. Each micro-investment added up, and before she knew it, her portfolio had grown by 15% in a single year, a tangible testament to the power of self-banking strategies. The self-banking lifestyle, as exemplified by these stories, is built on two main pillars: relentless tracking of finances and the courage to reallocate resources in favor of long-term gains. This approach directly addresses common pain points, such as feeling overwhelmed by bills, an inability to save, and the frustration of not seeing financial progress. By transforming how they view their money, treating every dollar as an active contributor rather than a passive commodity, people like Alex and Maria demonstrate that the journey to financial freedom is within reach. This chapter leaves listeners with a clear, actionable takeaway. Every small decision matters. By meticulously recording expenses, automating savings, and integrating even modest investments into their routines, anyone can create their own financial ecosystem. The self-banking lifestyle isn't reserved for financial experts. It's accessible to all who dare to take the first step toward reclaiming ownership of their financial destiny. Chapter 8. Your Financial Future. In a small suburban neighborhood, Alex realized early that building a sustainable future meant taking control rather than chasing quick fixes. He began by mapping out clear financial milestones, starting with an emergency fund that covered 3 to 6 months of his living expenses, a safety net that turned potential crises into manageable hiccups. Alex's journey wasn't a matter of luck. It was about creating a straightforward plan based on actionable steps. His first move was to automate his savings. Every paycheck, Alex set aside 10% in a high-yield savings account, which, within 2 years, grew into a comfortable cushion worth over $12,000. Listening to advice from no-nonsense financial mentors, Alex learned that cutting unnecessary expenses was as crucial as earning more. He tracked his spending with a simple spreadsheet, categorizing every expense. When he noticed his dining out cost ballooning, he set a strict limit, cooking at home more often. This led him to discover that small changes could free up a substantial amount of money that he redirected into investments. His portfolio, built with low-cost index funds, steadily contributed to his long-term vision of freedom. Realizing that financial security was more than just numbers, Alex connected with a community of like-minded individuals who shared practical strategies and held each other accountable. In regular meetups, they exchanged concrete tips, like negotiating lower bills or adopting side gigs that paid an extra $200 a month, which transformed abstract goals into measurable progress. One member even detailed how refinancing her mortgage cut monthly expenses by 15%, directly fueling her savings goals. Alex's plan went beyond accumulating cash. It was about legacy. He started an education fund for his daughter, ensuring that his efforts today would empower her tomorrow. Each milestone, whether it was paying off a credit card or reaching a savings goal, reinforced his belief that living within one's means and strategically investing could replace financial stress with genuine confidence. In this roadmap, every step mattered. The emphasis was not on overnight success, but on consistent, deliberate actions. Alex's journey teaches that the road to financial freedom is paved with discipline, informed choices, and regular reflection. His clear, methodical approach encourages anyone ready to break free from the cycle of uncertainty and plan for a future that not only secures their own legacy, but creates a lasting impact for generations to come. The end. We hope you enjoyed the audiobook. This audiobook is a production of WealthBooks. Copyright 2025.